So this week I did a huge market update for Safe Credit Union. Thank you so much everyone for attending. And I wanted to re-record it real quick because I've been getting requests and the recording that happened on Zoom, unfortunately my screen didn't show right. So I hope this is a little more clear, but this is going to be an update on steroids. It's about 40 minutes or so. I want you to walk away and just understand what are some of the dynamics happening in the Sacramento region right now. What are some things to focus on for business? Maybe get some ideas for the future. Okay, my last slide is about, 20 things to focus on for 2021, and really just to pick up some talking points as we interact with friends and clients regarding the market today. So if you'll join me, hope this will be useful for you. Make sure to like it if you like this, and let's go from there. So the market has been really extreme lately, and the reality is that nobody has predicted it. Let me repeat that. Nobody predicted the market that we would be in today. So we approach today with humility that it's a lot more difficult to predict real estate than people lead on to believe. So, one of the things about the Sacramento area is that we've seen just tremendous price growth this year. And so, whether we're talking about Sac County, the region, or Placer, you can kind of see the median price, or average price per square foot that we're just up dramatically. Okay, for a while, especially in 2018, we started to see prices up maybe about 2 to 3 to 4% or so. Last year, in 2019, it started to slow, and then all of a sudden we're up over 10%. And so the momentum in the market has really changed lately. Okay, so we've basically been having a spring season during the fall. Here's what I mean. When you see the median price in dark blue, this is 2020, and the previous 2 years are below. Okay, what's normal to see happen is that prices sort of go up for half the year, and then they slide down for the second half. And so this year has been totally different. Prices were going up, the pandemic happened, and then prices dipped a little bit. And then there's just been this massive uptick in recovery, so to speak, and it's sort of bucked the normal seasonal softening that we would see. And so it really has felt like spring during the fall. Now let's break down the region, okay? And so how much cash and FHA, VA, conventional is in the region right now? If you work in real estate, this is really good to be aware of because we just want to ask who are the players in the market and how are they buying homes? So cash, only 11% of the market. I think when I share this, it kind of surprises some people because they think, gosh, I thought everything was being dominated by the Bay. What's going on? FHA 13%, VA 5.5%, and conventional 68%. All right. So here's cash. You can see from 2013, through now that there's been this dramatic decrease in cash. Okay. And so only 11% of the market. And so the idea is when I talk to people is that they're just getting beat out by all these Bay Area buyers. And sorry for my cheesy 80s Milli Vanilli joke. I can't help it though. And I think it's funny. But the reality is that that's not really happening, but it kind of is. Okay, and so technically there's less cash in the market. Only about 1 out of 10 deals are going all cash. But here's where cash is dominating. We are seeing a lot of buyers using conventional financing for the whole loan, but they will bring cash to pay above the appraised value, or they can bring cash to handle some repairs. Okay, there's a lot of creative ways that cash is being used right now, making stronger offers. And so buyers who are bringing less cash to pay above the contract price, they're struggling right now. Okay, and so cash. Can you see what I mean by technically it's not here, but it really is? All right. Um, LinkedIn published some stats a few months ago. I think this is very powerful. It shows April to August 2020. Here was an increase, biggest gains in net arrivals to Sacramento, 7.6% more people coming to the market. And so we have noticed extra migration lately. I'll share it in some stats later, but the Bay Area trend is very real. But I think we have to realize that there's a lot of local buyers playing this market. It's not just fat stacks of Bay Area cash. All right, here's FHA. It's at 13%, and it's really down from about 10 years ago. FHA is just a product that's not being used as much because conventional is so much more competitive. Okay, here's VA. It's increased in recent years, and just very slightly, that's great news for veterans. When you think about it, though, between FHA and VA, 18.6% of all sales this past quarter were FHA or VA. And so nearly 1 in 5 sales are still going FHA and VA in the market. And so sellers don't discount the ability of buyers to perform on these types of loans, okay? Because they are clearly getting deals done. And here's, of course, conventional. 68% of the market is just whopping. Now, true or false, half of all homes sold in 6 days or fewer last month. True. Okay, and so literally the median days on market was 6 days for the region, and that is just, it shows how competitive the market is. That literally half the sales sold in less than a week. They got into contract. Now, here's a look at days on market to show you how abnormal this fall season has been. This is in Sacramento County, and the black bars since 2015, they represent the fall season, September through December. And every year, like clockwork, you see days on market increase every year because it takes longer to sell during the fall. But look what's been happening in 2020. It's been taking fewer days to sell. And so it's like a spring season during the fall. Okay, so you may, pick up on this theme throughout this presentation. Now let's talk about the $1 million market. This has been a vibrant market and we've seen a lot of growth. Here's a graph from 2003 to 2020, and you can see exponential growth of the percentage of $1 million sales happening in the region. Okay, prices have gone up. We've seen an influx of buyers, but there's a lot of locals who are buying high dollar properties. Again, it's not just the Bay that's driving our market, okay? But you can see that 3.4% of all sales in the region in 2020 have been $1 million sales or more. And so this is a growing niche. If you work in real estate, it's a fantastic idea to get involved in submarkets that are experiencing growth. Here's a different way to look at it. Okay, this is a change in volume from 1 year ago. All right, we've had some of the most aggressive, I would say the most aggressive time in real estate that we've about had in Sacramento from July through October. Okay, mortgage rates went down near 3% and lower, and the market has gone crazy. And so this visual compares July through October in 2020 with the same time last year. And it's powerful because you can see that there's been 47% fewer sales under 300,000. Or you consider, 20% fewer sales under 400,000. And so the bottom level prices in the market, lower prices have started to really be gutted. And so you can kind of see this increase in prices. But you look above a million, there were 103% more $1 million sales over this 4 month period compared to last year. And so we've seen substantial growth at the top also. Okay, and so when we're looking at prices, the median prices increased in the region by 16%. Just know that on paper, you take out the prices at the bottom and you have more prices at the top. It just makes prices go up, more and more on paper. And so when you're pulling comps in a neighborhood, you might not actually see 16% growth. And so be careful with your expectations. Now let's talk about multiple offers. What is going on when you're competing out there? Okay, buyers are feeling it and they're frustrated. Some of them are getting burned out, but here's a comparison of 2019 versus 2020 with October. Okay, now we've had 39% more multiple offers this October compared to last year. Now, when we look at 2020 in blue compared to 2019 in what is this, like a mustard color, it doesn't look like there's that much of a difference, but let me kind of zoom in. This considers basically 10 to 30 offers. Here's 2020 in blue, and then last year below. And so we can see there's a substantial difference. For instance, the number of properties that had 10 offers last year was 2 or 3, and then this year there were 29 sales that had 10 offers exactly. And so we're in a market where we've experienced a lot of competition. There are definitely more multiple offers going on. Okay, but here's the thing to keep in mind, and I'll let you sort of pause this, chart. You can look at it more, but it shows the number of offers, how many sales had that many offers, and the percentage. Now look, 10 properties that had 10 offers last month, there were 29, but that was only 1% of the market. Okay, or we hear the stories of properties getting 20 offers. Well, there were 4 sales last month that had 20, and I'm not discounting the reality of the competition. It is fierce out there. Okay, but I do want to be careful in thinking that everything is getting 20 offers. That's not what the stats show. Okay, now if you're a buyer, you're going to have to bring a really strong offer to get a chance of accepting it. But I just want to show that 85% of the market has 1 to 5 offers. All right. And so let's keep that in perspective. But here's an interesting thing. Now, there's a lot of dots on this graph, and you might think, oh my gosh, what are you showing me, Ryan? But let me kind of walk you through what is going on here. Now, these are the number of offers below, 0 to 28 offers. And this on the y-axis shows the sales price to original list price ratio. That's a mouthful, but here's what it means. When a property sells at a 100%, it basically means that whatever the list price was, it sold for that exact amount. So it's at 100%. Now, if it sells at 110%, that means that this property sold 10% above the list price. So this shows the multiple offers relating to this ratio. And basically, the more offers there are, the higher they sell above the original list price. And okay, duh, thanks, Captain Obvious. That was really helpful. But here's where it actually becomes helpful because you see in the market around in Sacramento County around, five, maybe 6 offers, really between about 6 and 15 or so offers, maybe even 18. It looks like these properties sell for about the same amount. Okay. And so it just goes to show that there's sort of this sweet spot in the market where if you get 5, 6, 7 offers, you might be able to command the highest price that you can get. Okay, but sometimes I think what an agent friend said to me recently was that after about 5 offers, a lot of the offers start looking about the same. And I think there's some truth to that. And so, granted, if I was a seller, would I rather have 20 offers instead of 5? Of course, because I'm going to most likely pick the best one and, get the most money, all that stuff. But I think this shows that, sellers, you don't need to get 20 offers in order to have the highest price possible. Okay. And sometimes properties sell, look at this, with 3 offers. And, these 2 properties here sold for just about as much as the one with 20 in terms of selling above what the original list price was. All right. Enough about that. In terms of pricing, I would just say price according to similar pendings instead of sales. All right. Sales represent the past. They tell us what the market used to be like. And if the market has gone up, well, presumably those pendings are going to be at a higher level today. When a market's declining, we start to see, listings that aren't selling, and then you start to see pendings that are coming in lower, and so we want to price according to those, all right? But just keep in mind, here's a really good stat that last month, 32% of listings had price reductions. Okay, this is really key because even though the market's been super aggressive and it's really hot, about a third of the listings needed to get a price reduction. And it just shows that we are in a price sensitive market. You can't just throw up a list price there and then expect buyers to pay anything. All right. Now, has anyone heard of the foreclosure wave that's coming to town? All right. There's a lot of articles talking about this. I read one, I think, in Forbes recently that talked about a foreclosure tsunami. And so I want to talk about this because there's this idea floating around out there. And what I'd like to do is to kind of give you some local stats and, talk through some issues. Okay. So first of all, here's REOs and short sales. REO stands for real estate owned or bank owned properties. They're basically at their lowest point ever. Okay. You can't get much lower than this. Short sales were 0.20% of the market in Sacramento County over this past quarter, and then REOs were 0.82%. And so it's hard to go much lower than that. Now, to be fair, a lot of people talk about this coming wave of foreclosures. First of all, they've been talking about a coming wave for the past 10 plus years. All right, so let's give some context to that. But they say, in light of forbearance and everything going on, we're going to see all these foreclosures hit the market eventually. But like I was saying, to be fair, that we do have a foreclosure moratorium and eviction moratoriums, and so in some sense, if there was a problem, we wouldn't necessarily see this problem manifest in the stats, for quite a while until properties went through the foreclosure process until they legally could do so. All right. But when you look at forbearance, okay, these are people who aren't paying their mortgage. They've entered into this process called forbearance with the lender, and so they agree that the mortgage will not be paid. But you can kind of look at, Fannie, Freddie, FHA, everything. Forbearance has really increased at the beginning of the pandemic and in May, and so, but they've been going down. And so this is actually very positive news. Okay, I'm not sure if some of those articles that are talking about this foreclosure tsunami are accounting for this. Now, they're still elevated. Okay, we've got some red flags on the horizon. if these aren't dealt with, then yeah, we could have some issues for sure. But it's good news to see forbearance is actually going down. That means that people are dealing with their finances. They're starting to pay their mortgages and such. Okay. Here's an interesting exhibit by Freddie Mac. Here's a link below, but you could basically see here's a loan to value ratio at the bottom. Okay, and 100% loan to value right here. And basically, what this shows is that there's a higher rate of forbearance the higher you go on your loan to value. And so, the buyers that are more susceptible to hardship and to forbearance would be buyers putting less money down, which would include, FHA buyers and VA buyers in particular. Okay, now, here's delinquency rates because I think a lot of the articles are talking about mortgage delinquencies have skyrocketed. And look, they have. Okay, this is a real issue. If this is not dealt with over time, then sure enough, yes, delinquencies can turn into defaults and can turn into foreclosures, and maybe some of that will hit the market. Okay, but the positive news is that look, over the past quarter, we've seen mortgage delinquencies go down. Okay, now there's no rose-colored glasses here. They're heightened. This is not a good thing for the market, but if this starts to persist in going down, that's actually a very good thing. Okay, so something to watch. Now here's delinquencies by loan type. This is from the Mortgage Bankers Association. And what I want to call your attention to is look, FHA and VA are both higher than conventional. And so it goes along with what we saw with forbearance rates. The less money that people put down, the more at risk they are. And so for any real estate professionals, I would say go back and serve your clients who have put less money down. Make sure that they know what their options are, whether it's forbearance or listing their homes or loan modifications or whatever they need. Just serve them well right now and realize that not everyone in this current market is going at the same speed. There's some people who are thriving and some people who are struggling. All right, so how has the pandemic affected buyers and sellers in this market? Here's some things, and I apologize if I'm talking too fast. I feel like I'm going crazy here. Hopefully, it's able to be listened to. But there's a desire for larger homes and more land. People really want more space today, okay? And I'll show you some stats later to substantiate that. People are less interested in condos, okay? They don't want that tiny backyard. Maybe for some it's they don't want the HOA fee. They're a little bit more sensitive financially, but there's been a clear trend of focus on single family detached homes, okay? People are more hesitant to list. It's been astounding to see what's happened with listings. I'll show you in a few slides on that. People need space to work from home. And so all of a sudden, having that space to work from home becomes all the rage and it becomes very, very valuable. And especially if you have a few different spaces, because at least temporarily during the pandemic, we need space for kids, we need space for mom and dad, or, whoever is in the home. Everyone wants the ultimate backyard, especially if it has a pool. All right. Employers allowing people to work from home is a really big deal. It can be a game changer. And it's not just about, tech companies in San Francisco and then maybe some of those employees, moving to Sacramento or different states, because I have a friend who works in the insurance industry in Sacramento, and she and her family just moved to Idaho and they bought a house because she is able to work from anywhere now. All right. And so this can be a game changer for a lot of people throughout the country. All right. And I think most of all, people are reevaluating what they want in life and where they want to be. So I think if anything, the pandemic has sort of been a pause button for some people. And so they push it and think, where do I want to be? What are my goals? Where do I want to live? Who do I want to do life with? Do I want to be in this relationship? I mean, all these questions going on, okay? And it's influencing people's decisions. All right, now, speaking of decisions, some people ask me sometimes, what has the market done since 2005? Now, I think most people in the market, they don't buy based on geeky price metrics or graphs. They're buying because their lifestyle mandates a purchase. Okay. And so they're entering the market because it just makes sense. Maybe they need a larger home or a smaller home and they have their needs. But some people, there is a sliver of the market today who are focused on what's happened since 2005. And let me walk through that because my realtor friend John emailed me a couple weeks ago and he asked me for a specific visual. And he said, Ryan, do you have a visual to show what the market's done since 2005? I said, but of course, John. And so I showed him, here's the median price in Sacramento, and it's up 11% from this time period. Now, It's a little bit on the absurd side to compare this market with then because look, what happened then is not the new template for every future market correction. Okay, it's not the new formula for how any market would correct in the future. Now, markets go up and they go down. At some point, we would expect for prices to go down because there's this cyclical nature to the market. But in my experience, people look at this in two ways. There's a group that they're eyeing 2005 and they're asking the question, how much might the market go down? Right? Even though, like I said, this isn't a great comparison to today, but they're asking that question as they assess whether to purchase. And so on the buyer side, that's sort of the thought. Okay, but on the seller side, sellers look and go, we've had 9 years of price growth, and maybe I want to list soon because I feel like we're topping out. And so there's these two different dynamics, and I think a sliver of the market is going to be making real estate decisions, based on, which question they're asking. So just be ready for those conversations. Now, 1031 exchange sales. Let me show this dynamic. 1031 exchanges are basically when money's moved. It's a special process, to basically shelter money from taxes and such legally. And you can see the past 20 years in Sacramento, there was a burst of 1031 exchange sales when the market was going up through 2005, and then we've had an up market here, and there's been a huge cluster. And so more people are moving money into Sacramento and out of Sacramento when a market's up. So I think the question for you, if you work in real estate, or especially if you're an investor, is who is moving money into the market and who is moving money out. Okay, that can identify maybe future business and future clients. All right. Now, inventory is just in ridiculously low. It is absurdly low. And why is it so low? Let's talk about that. Then let me show you some visuals. People aren't listing during the pandemic. All right, many people aren't anyway. There's more demand is gobbling up existing listings. Now, one reason why there are fewer listings is because demand has been so strong and it's taking over everything that's on the market. Okay, we're feeling the sting of years of not enough new construction. Okay, and so I think after 15 years of not building enough units locally, I mean, we're really sort of in this moment where we're going, gosh, we are feeling that because we've had population growth. Demographics have shifted. Redfin put out some fantastic research within the past couple of years to show that people are staying in their homes an average of 13 years instead of 8 years, which was the reality about 5 years ago. And so there's been this shift, and that would explain why there's fewer listings coming to the market. Okay, we have increased migration from the Bay Area. That goes without saying. One thing to consider is that home sizes have increased really over the past 20 years. I can show that statistically in the Sacramento area. And so I think having larger homes, they could be more suitable for people and they have to move less because it meets their needs. We have fewer distress sales, and so there's all these properties that aren't short sales and foreclosures that aren't hitting the market. Okay, people are sitting on low rates and equity. So for some, they're sitting on a really sweet deal and they're just not going to move. Okay, but I think one other issue is that some people, maybe looking go, gosh, I would want to sell, but there's nowhere to go, right? And because inventory is so sparse. And so that's definitely an issue that we're facing in the market. Now, here's how we look at listings. I'm not making this up, but listings have basically been cut in half this year. Okay, you can see 2019 in blue and 2020 in green. And in the Sacramento region, there's 47.3% fewer listings. And you can go down, pause the screen if you want. Here's all local counties. And it's been like this for several months where this month there were literally 1,999 fewer listings at the beginning of November compared to November 2019. And that's just astounding. And so no wonder why it's so competitive for buyers if there's 2,000 fewer listings, right? So here's monthly inventory, and you can, check out the region and local counties, but basically mortgage rates went up, or excuse me, went down, and we see this profound dip in inventory in all local counties. And so one of the things that I did mention, but mortgage rates are helping to drive demand, and it's really depleting inventory because of how low those rates are. Here's Sacramento County, the months of supply by price range. You can pause this if you want, but I just wanted to show that, here's $1 million and all of the price ranges. The market has been depleted in every single price category. It isn't just, between 300 and 400,000, even though it's more severe there. Every single price range has seen this decrease in inventory. All right, here's some really good news for the market that we're finally caught up to last year in terms of sales volume. Okay, here's January through October for each respective year, and you can see in 2020 in the region we're just above 2019 now. And so this is really positive news. It's glowing news because for the bulk of the year we've been trailing behind because when the pandemic first happened, there was a drop in volume. Okay, more good news. You need some? Well, new construction sales have been really strong these past few months. This is from North State BIA. It shows September sales each respective year. And it's been like this for multiple months in a row. And so I'd say that buyers are very hungry for new construction. And frankly, I think that builders can't build fast enough to satisfy the demand. All right. Now, here's, I think, one of my favorite recent graphs. I made this recently. And I like this because it shows that the market has a rhythm. So important to understand. And so this basically takes 7 years of monthly sales and averages them. And so you can see down here in the region, there's about 1,600 sales usually in January. And then for half the year, we see more sales until June, the market tops out, and then you see this seasonal descent where the market goes down. Okay, now I wanted to show this for a couple reasons, but really one of the big reasons is that I think sometimes in real estate, the real estate community struggles to talk about the market in any terms that aren't absolutely glowing. And so sometimes when I share stuff, stats, and say, hey, it looks like we're seeing a seasonal slowing, then people are like, no, I can't accept that. I rebuke that. Get out of here. And I'm thinking, no, but that is so normal. And so I just want to challenge you. If you work in real estate and you find yourself unable to talk about the market in any terms that aren't glowing, then maybe have sort of a reflection time to ask yourself, why are you doing that? Okay, because a positive only narrative works really, really well when the market's going up, but it does not work well when the market's going down and then everyone else and their mom goes, hey, I know that the real estate stats aren't sexy. Why are you talking about it like it's so hot? Okay, but the second reason why I wanted to share this is because look at 2020 in black. It's been way different than the average. And so when the pandemic began, we saw a definitive dip in volume. All right, I was talking with someone the other day saying, hey, the market really didn't change that much at the beginning of the pandemic. And I would say, yeah, it did, in Sacramento at least. And then, but since then, you can see volume has recovered. It's been elevated beyond normal. But look at this. We're seeing a seasonal descent. And so 6 weeks ago, I wrote a blog post talking about the super competitive and slowing market. And then at the time, people were like, come on, Ryan, what kind of crack are you smoking? You're high. That doesn't make any sense. But look, it actually does make sense because we're seeing a slowing of volume. There's less eyeballs on the market right now. Okay, doesn't it feels really competitive. It's like spring out there, but technically we're seeing sort of sales volume do what it normally does, even though it's heightened. Okay. But here's the past 4 months. I love these visuals. They're super colorful, but I think it's really, really insightful as to what's been happening since rates went below 3%. Okay, so here's July, August, September, and October in corresponding colors. And you can see by year, 2020 this year has outpaced previous years in the Sacramento region. But check out what's happening in El Dorado County. Now, in El Dorado County, we've seen far more volume this year compared to previous years. Similar dynamic in Placer County, where it has far outpaced previous years. Now, Sacramento County has also outpaced, but it's nowhere near what the dynamic that we've seen in Placer and El Dorado. And so it just goes to show we've seen increased migration in both of those areas. And one of the reasons why we are back to normal levels for volume for last year is because of what's happening in El Dorado and Placer. So thank you to both those counties. Okay, we have seen fewer condo sales this year, 14.1% fewer condo sales, and this represents really 21 years worth of sales. And you can kind of see that we're on, in terms of the percentage of condos in the market, we're on one of the lower years out of 2 decades. And so there's been a definitive difference this year. Now, condos are still marketable. There's not an oversupply of them, but I think when buyers are looking at the market today, backyard versus no backyard, I think it's pretty clear what they're choosing. All right, pool sales are up 6.4% this year compared to the previous year. So pools really have been all the rage. People want more pools. They want that Pinteresty backyard. All right, home sales Our home size has also been up. I'll let you kind of unpack this graph, but I'll say basically over the past 3 to 4 months, we've seen larger homes sold in the Sacramento region. All right. I'll say my junior high analogy that the real estate market is like a hot pocket. Okay. I can't actually eat hot pockets anymore. I'm in my mid 40s and, I just wear them on my body. I swear it's so easy to gain weight now. But the real estate market is like a hot pocket taken out of the microwave too early. And if you've ever done that, we've all been there. You take it out too early. There's some spots that are still frozen. There's some spots that are blazing hot. Some of it's lukewarm. And the real estate market is just like that. The temptation today is to look at every type of property in every neighborhood and go, it is all going crazy. But that's not true because the market's like that hot pocket taken out too early. Let me show you what I mean. So here are 2 to 4 unit sales in Midtown and downtown, and you can kind of see since 2012 there's this huge increase of value, but look what's been happening in the past couple years. Prices have been somewhat horizontal, okay? And so it just shows that this market cannot be described like, the single family market in East Sac or duplexes in South Sacramento where, if prices have been increasing, we would say of this market that demand is still strong. There's not an undersupply. Properties are still moving quickly, but we don't see a lot of price growth. And so the market is like a hot pocket. Do you know what I'm saying with that analogy? And here's a different way to look at it. You can see the original list price to sales price ratio. Basically, properties between 300 and 400,000, they sold almost 2% on average above their list price. But look at the $1 million market. On average, these properties sold 6% below what they were listed for. And so the market isn't the same in every price range, neighborhood. The trend could be different, depending on the city, the location, whether we're talking about vacant land versus half plexes or condos. And so let's just be aware of what we're seeing. Even with multiple offers, you can see basically the higher the price, the fewer offers there are. Okay. And this is a normal trend, what we would expect to see in real estate. I just think the stats remind us that, oh, I better not talk about the market like it's the same, in every listing presentation or in every appraisal I do, that sort of thing. So what's happening with iBuyers? They seem to drop off the face of the planet this year. I think we've seen that, them pump the brakes, and it looks like their model has not, done so well during the pandemic. Here's a chart by Mike Del Prete, and to show total transactions in 2020. Mike Del Prete shows it transactions are down 50% this year compared to last year. Okay, he includes Redfin as an iBuyer. I wouldn't describe Redfin as an iBuyer in the Sacramento market. Okay, and so these models have not done well this year. I think in large part because they've pulled back. They haven't been playing the game. Okay, Open Door in our market used to regularly have 100 or so properties that they owned. And last time I checked a couple weeks ago, they only owned 11 properties. Okay, and Zillow owned 21 properties when I checked. And so it's been really minimal, their interaction with the market in 2020. I suspect that they're going to retool and try to get up their numbers for last year, but that's kind of where they've been at. Now, let me go over some quick X factors. I have 3 X factors, and then I want to walk through some closing thoughts for focus for 2021. I hope you've got a lot out of this. I hope you're not sleeping. If you like it, please give it a thumbs up and ask questions, share insight. But here's the unemployment rate. This is a huge X factor. What happens with the job market and the economy? Okay, so we see the unemployment rate in black in the United States. It shot way up during the beginning of the pandemic, and since then it's been going down. And this is exactly what we want to see. This is positive news. It's still elevated more than we'd like, of course, and there's sort of uncertainty on the horizon with, okay, is there going to be this other, lockdown of business with a second round of COVID and such? And so, we'll see what this line does in coming time. In Sacramento and all surrounding counties, Sacramento's in blue, it's experienced a similar dynamic, and that's also positive news. Okay, another X factor is mortgage rates and what happens with rates. Here's a graph from Fred that shows basically 1980 onward. And let me say this about rates. Our market is very sensitive to rate changes. Now, I won't predict the future because no one predicted 2020. It would be absurd for me to predict where rates will go. Who would have ever predicted that we'd be below 3% for interest? But I'd say this. Our market would in no way be doing what it's doing without mortgage rates below 3%. Like I showed you those graphs or those charts with exponential volume over the past 4 months. And so it's almost like we have all these glowing news. And I think a lot of the headlines are like, look how strong the market is. But you know why the market is so strong? I mean, for a lot of reasons, one of the big ones is because low rates are getting people to play the market. And so let's not underestimate the power here, and because this is one of the main drivers of the market. And so let's see what happens with rates. I think the last X factor that I would say is let's watch and see what happens with a lockdown, okay, with COVID stats. Now, our market in Sacramento has done extremely well with the current COVID protocol, okay? Agents have done an outstanding job and buyers have been able to shop, enduring, obviously one person at a time and, following certain precautions, okay? So the market can thrive and can continue to do so, if the rules stay in place. And so I suspect as we go and enter into this season, and if rules don't change, there's no new lockdown rules, then maybe the market, yeah, remains the same, ultra competitive as long as something doesn't change with demand. Okay, but here we have in California, there's a curfew starting, this weekend, 10 p.m. And we're not going to talk about politics here, but I'm just saying that there can be new rules instituted. And so what we want to watch for is, does the government begin to restrict access to real estate? If access is restricted, then that's where we can see an impact in the market. Now, and it would presumably be temporary until, access becomes full again. But I want us to watch this closely, but I also want us to watch what is the sentiment among buyers and the sentiment among sellers. If we start to see resistance, particularly if COVID cases and COVID deaths increase, could we maybe see some sellers who say, yeah, I'd rather wait it out and I'm not going to list my home right now? Or some buyers say, there's uncertainty on the horizon. I want to, maybe hit the pause button and say time out. Okay. That's certainly not how the market feels right now, but I do think this is something we want to watch. Now, some quick closing thoughts to focus business in 2021. Here are some things on my mind. So be fluent in trends so you can spot what is normal versus what is not. This separates the real estate professionals from the novices when you can articulate, here's what the market's doing, here's why it's doing it, here's seasonal, or gosh, we're having this spring trend in the fall. This is not normal. Props to those who are able to explain that. 2, find inroads to the growing luxury market. This is definitely a growing niche. 3, I'd say watch for a Biden $15,000 first-time buyer tax credit. Okay, this is the hope of the administration for the president-elect, and whether it happens in 2021 or not, if it does, and if there's actually money for that, right? Then that could be sort of something that to help speed up the market. Not that we need more speed. Watch for fallout in the commercial market. Okay, this is a very real thing, and remember that commercial property owners may also have real estate that they need to sell residential anyway. Build referral partnerships with agents in Texas, Idaho, Arizona, Oregon, and all these places, because this represents money to be made, for Sacramento area real estate agents. I'd say get acquainted with all new construction developments. This is a growing market segment. Buyers are hungry. Your clients are hungry. Please represent them in front of builders. Be careful about regurgitating sensational headlines that might not apply in our market. Be really careful about sort of, the foreclosure tsunami's coming, okay? Let's watch these stats and see how they develop. If it comes, great. But if it doesn't come, then we lose credibility when we share sensational stuff. Be well prepared for bubble conversations like I mentioned before. Find sellers who want to cash out at the top, so to speak. Okay, look for sellers who want to downsize or upsize. Build connections with pool contractors and landscapers. Okay, if you work in real estate, you become more valuable to your clients because these are both really big needs right now. I'd say identify companies that are letting employees work from home forever. You have Twitter, Slack, Square, Upwork. Okay, this is a big deal, and there's some smaller companies too because this represents people who can move to the Sacramento market. Okay, 13, identify who is thriving and who is not in a K-shaped economic recovery. Let's not get too much into that, but the K-shaped concept is that there will be, there's one group who's going to, really thrive, but there's a whole host of other people who are not in that department. And so I just say who are the people groups in Sacramento or whatever market you're in that are poised to thrive, or their businesses are going well, they're going to participate in real estate, and who are the people who aren't, because they both have different needs as it relates to real estate. Okay, watch for tenants who are frustrated with the tight rental market who might want to buy. I'd say write up contracts for owners that are selling to tenants. I do a lot of appraisals to help the owner and the tenant establish the price, and I always recommend make sure you work with a licensed realtor to be able to help you write up that contract. Don't do it alone is always my advice. Okay, this is a niche market. So become well informed about how 1031 exchanges work. Like I mentioned, study migration patterns so you can help owners wanting to move out of the market. I just published some recent stats that came out from the Census Bureau on my Facebook page today, on Twitter, Instagram. Check them out, who's moving to California and who's moving here, or excuse me, and moving away from the market. Okay, find buyers who are moving because of their lifestyle and ability to afford. Okay, that's what the message is. If you're going to preach any message about the market, that's it. It's not, where prices are, bubble versus not. That's not sort of the motivating factor for most people in most markets. Okay, two more things. Keep an eye on the Bay Area market and be ready for some inbound growth. And last but not least, don't keep doing the same thing because it won't work in every market. Okay, so what do you need to do this year to change things? What new tools do you need to add to your bag of tricks? What are your clients going to need as their lives change and as they're assessing life and figuring out what they want to do? Okay, so the last thing I want to say is that we are poised to start 2021 with a very aggressive market. Okay, we've have mortgage rates below 3%. We have out of control demand. We don't have enough listings. Okay, assuming that nothing changes with COVID stats, with the virus, any of the X factors I mentioned, I'd just say, buckle up. Let's be ready. And most of all, let's see what this market ahead has in store for us. Nobody predicted 2020, so let's see what happens with 2021. Thanks, everyone. I appreciate your time. I hope this was useful. Let's talk in the comments.